You've been told the global economy is controlled by governments, by elected presidents and finance ministers, by central banks that answer to the public. But what if I told you that the most powerful financial forces on the planet have no headquarters you can visit, no CEO you can name, and no vote you can cast to change what they do? And here's the uncomfortable part. They're not hiding. They're hiding in plain sight, right inside the system everyone trusts. Welcome to KMazora, the channel that exists to show you how money and power actually work. Not the version they teach in school, not the version on the evening news, the real version. By the end of this video, you'll know exactly which markets are pulling the strings of the global economy, why your government has less power than you think, and what all of this means for your money right now. Let's start with number 1, the derivatives market. Here's a question most people get completely wrong. How big is the global economy? Add up every product sold, every service rendered, every dollar earned by every country on Earth in a single year, and you land at roughly $105 trillion. That sounds enormous, but here's what nobody tells you. Sitting on top of that economy, like a shadow version of reality, is a market worth over $600 trillion. That's not a typo. $600 trillion, nearly 6 times the size of everything humanity produces, in a market called derivatives. So what is a derivative? Think of it like this. Imagine you bet a friend $100 that the price of coffee goes up next month. You don't buy the coffee. You don't own a coffee farm. You just made a bet on the future price of something. That's a derivative. Now multiply that logic by the entire global financial system. Every currency, every interest rate, every commodity, every bond on the planet. And you get a market of bets stacked on top of bets, stacked on top of more bets. And when those bets collapse, the whole system feels it. That's not a theory. In 2008, it wasn't just bad mortgages that caused the crisis. It was the invisible web of derivatives built on top of those mortgages. Credit default swaps, mortgage-backed securities, that turned a real estate problem into a global catastrophe. The people who designed those products, most of them walked away richer. That's market number 1. Number 2, dark pools. You've heard of the New York Stock Exchange. You've maybe heard of NASDAQ. What you probably haven't heard of is where the biggest players actually do their trading. Dark pools are private stock exchanges run by the largest banks in the world. They're called dark for one specific reason. Nobody outside can see the trades happening inside. No price transparency, no public record, no way for ordinary investors to know what's moving. Here's why this matters for you. When you buy shares of any company on the public market, your trade is visible. It nudges the price. Everyone sees it. But when Goldman Sachs or JP Morgan wants to move $500 million worth of a single stock, they cannot do that publicly because the price would move against them before they finish. So they do it in a private exchange, invisible to the market you're trading in. Right now, dark pools account for roughly 40% of all U.S. stock trading volume. Nearly half of all stock trades in America happen in a market you cannot access, cannot see, and were never told existed. And this is completely 100% legal. Number 3, the 3 companies that own everything. I want you to try something. Think of any 3 major brands: a tech company, a food brand, a car manufacturer. There is roughly a 90% chance that the same 3 institutions are among the top shareholders in all of them: BlackRock, Vanguard, State Street. Together, they manage over $25 trillion in assets, more than the entire GDP of the United States. They are the largest or second largest shareholders in Apple, Google, Microsoft, Amazon, JP Morgan, Coca-Cola, ExxonMobil, Ford, Pfizer. The list is almost every company that matters. Think of it like this. Imagine one landlord quietly bought up most of the buildings on every major street in the world. They don't run the shops inside. They just own the buildings. And when you own the buildings of competing shops, you have very little incentive for them to aggressively undercut each other on price. Economists call this common ownership, and researchers have linked it to suppressed competition in airlines, pharmaceuticals, banking, and beyond. Nobody voted for this structure. No law was passed to create it. It just accumulated quietly over decades. That's market number 3. Now, I know what you're thinking at this point. This sounds like a conspiracy theory. And I get it. That was my reaction too the first time I went down this rabbit hole. But stick with me, Because everything I've shown you so far is publicly documented, academically studied, and reported in the world's most respected financial publications. What's coming next is even stranger, and it's been operating since 1930. Number 4, the reinsurance market. You know what insurance is? But do you know who insures the insurance companies? When a major hurricane devastates an entire coastline or a global pandemic triggers billions in claims simultaneously, insurance companies face losses so large they cannot absorb them alone. So they are insured too by a layer of companies called reinsurers: Munich Re, Swiss Re, Hanover Re, Lloyd's of London. These firms sit at the very top of the global risk pyramid. Every natural disaster, every industrial accident, every climate event, the financial exposure ultimately flows upward to them. The global reinsurance market is worth over $600 billion, controlled by fewer than 10 companies. And here's the twist that most people miss. When a developing nation is struck by a catastrophe and its government must pay out massive disaster claims, the terms of those payouts, the premiums, the exclusions, the caps, were calculated by actuaries in Munich and Zurich, years before the storm ever formed. They don't create the disasters. They just profit from being better at predicting them than anyone else on Earth. That's an extraordinary amount of quiet power. Number 5, the bank that sits above all central banks. Most people know the Federal Reserve controls U.S. monetary policy. Some know the European Central Bank controls Europe's. Almost nobody knows about the institution that coordinates both of them and 61 others. The Bank for International Settlements, the BIS, was founded in Basel, Switzerland in 1930. It is the central bank for central banks. It processes transactions between the world's monetary authorities, sets the global banking rules that every bank in every country must follow, called the Basel Accords, and acts as a lender of last resort when currencies collapse. And unlike every other financial institution on the planet, it operates under full diplomatic immunity. No national court can compel it to open its records. No government regulator can audit it without permission. Its building cannot be searched. Its staff cannot be prosecuted by any country's legal system. It is the most legally protected financial institution in human history. Every time the Fed raises interest rates, every time the ECB injects liquidity, every time a developing nation's currency goes into freefall, there are conversations happening in a building in Basel, Switzerland, that the public will never read, and that no elected official controls. That's market number 5. Here's what I want you to take away from all of this. None of these markets are hiding because someone is hiding them. They're obscure because they're complicated, and complicated things don't go viral. The derivatives market, dark pools, common ownership, reinsurance, the BIS, these aren't conspiracy theories. They are the actual architecture of the global economy, studied by academics, reported by financial journalists, and understood deeply by the people who use them to build generational wealth. The gap between those people and everyone else isn't intelligence, it's information. Now you have it. In the next video, I'm going deep on the $30 trillion shadow banking system, the part of finance that operates completely outside of regulation, and why the 2008 crisis may have just been a warning shot for what happens when it breaks. You are not going to want to miss that one. If you haven't subscribed yet, it's completely free. And it's the easiest way to make sure this kind of content keeps finding you. The world makes a lot more sense when you know where to look. I'm KMazora. See you in the next one.